Let me ask you a question. What happens when you balance your finances, career, and your well-being? There's no limit to what you can achieve. I'm Jalen Vickery, your host and guide on how to build wealth with wellness. Living in a world of information overload and misleading highlight reels, Finance Fitness Finesse is a podcast to help you realize you're not woke, you're broke, and how to change that in your favor. If you're looking to elevate your wealth, well-being, and discover the power of balance, tune in to learn why money matters but wellness counts. Hey Finessers! Welcome to another episode of Finance, Fitness, and Finesse, where we build your dimensional wealth with wellness. I'm your host, JaeVic, and today we've got HYSAs 101. I've had a lot of finessers contacting me asking why their high-yield savings account APY interest is decreasing. Well, we're going to do a crash course so we understand how and why our money is moving, plus a strategy to leverage loans in our favor. Intrigued? No? You should be. Let's get into it. Okay, guys, so we all just survived an election year, and we're moving full speed into 2025. Holy shit. Has it been almost 5 years since COVID? Zones out from trauma. Anyways, money is moving all the time, both personally and economically. 2 years ago, I had $2,000 to my name with rent plus a credit card bill that matched the same amount. Now, looking at my expensive piece of paper on the wall from my prestigious university made me realize it was up to my own methods of education to learn how to leverage my money in my favor and not live paycheck to paycheck. Yeah, I had started making small contributions to retirement accounts at the time, but I needed to find a way to make my money grow so I could survive off of more than beans and rice. Stocks, bonds, indexes, and all that jargon freaked me out. So investing in the stock market was not an option. And honestly, I did not trust the finance bro in my DMs telling me what to invest in. In the last 2 years, I've been able to triple my savings, build an emergency fund, leverage my loans, and achieve confidence in my money game with a simple basic move. The single best first investment I have made as a young adult with a varying income is a high-yield savings account. Psst. Are you listening? Listen real good. I gotta tell you something. You're not woke, you're broke if you have not done your research and started your financial independence journey with an HYSA. I won't tell you again. Granted, kudos to you for listening to this episode to learn how to protect the value of the dollars you spend. Also, if you haven't done it in any of my past episodes, check out the show notes for more information on banks with HYSAs to make the best decision for you. That's all the resources and information that you guys need. That's really where I started to diversify my knowledge portfolio, was checking out show notes on podcast episodes. And keep in mind, I'm a lifelong learner with you guys, so I'm just sharing what has worked for me. I'm not saying it's what's best for everybody. If you have any information you want to spread to the Finesser community, contact me in the show notes so we can spread the good word. I don't want to discredit the power of Roth IRAs or 401ks, which are two types of retirement accounts, but if you're freaked out by the stock market and want immediate access to your funds, especially if you have a limited cash flow, HYSAs are one of the best places, at least it has been for me and my community of people, to start growing our savings on top of some free money based on the interest too. Free! Compound interest! Free money! Okay, now let's talk HYSA basics. This is the crash course part, so either take some notes, and listen, finessers, go ahead and rewind if you need to so you can really pick up what I'm putting down. You hear me? Here are the top 10 things you should know about HYSAs. Number 1. HYSAs provide much higher APYs, annual percentage yields, than traditional banks. This means your money grows faster in an HYSA compared to a regular savings account. APY is the interest your money in the account is compounded by. For example, while a typical savings account might offer an APY of around 0.01%, maybe a little more, a high-yield savings account could offer anywhere from 2 to 5% or more. Simple terms, your money makes more money while you're sleeping, aka passive income. Number 2, APY is interest in your favor, while APR, your annual percentage rate, is interest against you, typically found on loans, credit cards, etc. That doesn't directly have to do with an HYSA, but people need to know their interest rates so you know, again, what type of interest is helping you versus what type of interest is not helping you. APY, positive. APR, negative. Numéro 3. Ugh, I wish French stuck in high school. You should know that most HYSAs are offered by online banks, which often have fewer overhead costs. This allows them to pass the savings on to you through higher interest rates. I'm talking to you guys out there, hello, that are afraid of online banks because you can't walk into them and you might think it's a scam. Well, this is where I tell you, number 4. Shop around for HYSAs insured by the FDIC for banks or NCUA for the credit unions because they insure you up to $250,000. This insurance protects your money in case of the institution fails. I like to know what acronyms stand for, so FDIC stands for Federal Deposit Insurance Corporation, and NCUA stands for National Credit Union Administration. Mambo number 5. HYSA rates and requirements vary between banks. This goes for other types of accounts too, because banks may strategize differently to make profits. Banks offer different rates that can vary based on factors like the minimum balance required or monthly deposits. Some accounts might require you to maintain a minimum balance or set up regular direct deposits to qualify for the highest APY. My HYSA does require direct deposits. That's again the trade-off for the really great compound interest you're gaining. But I just deposit one of my paychecks and qualify for the highest rate. So I promise it's not as scary as it seems. Now don't fall for this, and I'm speaking from experience, that the HYSA at the highest listed rate you see online does not always mean it's the best answer. Please do not be that kid lured in by the big bucket of candy. You don't know what it could be laced with, aka those hidden fees that some banks have. To maximize your benefits, compare the requirements and perks of various accounts before making a decision. Number 6. The Federal Reserve, or the Fed, is the ultimate boss of money in the U.S. economy. Imagine it as a giant control center that keeps everything balanced so things don't go off the rails completely. Here's what the Fed does. What I like to call the money flow boss. They decide how much money is quote-unquote out there by raising or lowering interest rates, which makes borrowing easier or harder. The Fed can also be considered the price police. I mean, they're meant to fight inflation, which is when stuff gets too expensive, and deflation, when prices drop too much to try and keep prices steady. They also serve as a bank babysitter, watching over banks to make sure they're playing fair and staying safe with your money. Quote unquote. And if things get messy, the Fed steps in as an emergency hero, rescuing us from our financial crisis. The Fed's here to stabilize things. Ah, my Prince Charming. Think of the Fed like the coach of an economic sports team. It doesn't play the game itself, but calls the plays to keep the economy running smoothly. I know, you're like, Jay, why do you keep talking about the Fed? Well, number 7, interest rates follow the Federal Reserve. And I'm with you guys. Ugh. It's annoying seeing my HYSA rate go down. Like, I get a little salty every time I get those emails. But let me tell you, it ain't all that bad because you may notice inflation going down too. With more power to my dollar, I can't wait to buy more than 6 items at the grocery store. Anyone with me? HYSA interest rates often reflect the Federal Reserve's benchmark rate, which is adjusted to manage inflation and economic growth. When inflation rises, the Fed may raise rates to cool the economy, leading to higher HYSA rates. On the flip side, when the Fed lowers rates, HYSAs typically drop too. When inflation is up, which is what we've been used to, the Fed typically raises rates to slow that economic activity. This is what happened after COVID. Everyone was all hunkered down, and then we all came out of COVID, guns a-blazing, chucking our money at everything, just all excited to spend because we had a new rigor for life. Which, as we should, but that rigor for life was immediately squashed pretty soon after when we were still trapped in COVID and nobody wants to socialize anymore. So we're just stuck in retail therapy cycles, and now things are more expensive and we're confused. All this to say, maybe I'm trauma dumping here, when the Fed raises inflation rates or interest rates, it makes borrowing money more expensive, which is why there's higher mortgage rates or credit card rates go up. But savers, the savers, are often rewarded with higher returns on accounts like HYSAs because banks, other financial institutions, they increase their rates to stay competitive and attract deposits when they're in need of funds. CDs, money markets, bonds, those are a few other types of accounts that will have higher interest rates in your favor when inflation is also up. Number 8, communicate with your bank. Those that don't ask, don't receive, and they certainly won't understand. As a lifelong learner, dripping in finesse that listens to F3, I know you understand the power of the question. Be sure to get on the phone with a human being to ask any questions you have about fees, your account, or fluctuating rates. Operator. Representative. I said representative. We've all been there before. A great customer service team with a quick response is key to a smooth banking experience. Take it from someone who worked behind the scenes as that customer service rep at a bank for a year. Having that experience working in banking was truly my first introduction to de-escalating intense money conversations to help people get the service that they need and feel safe with their money. Number 9. Here's where the magic happens, guys. Leveraging your loans with an HYSA. Students, entrepreneurs, anyone taking out a loan for a big investment, listen up. If your loan interest or APR is lower than the APY you're earning from your HYSA, you can effectively use that interest earned from the HYSA to offset the cost of the loan. Now, your interest against you, APR, on the loan can be paid for just by keeping the loan money in an HYSA that compounds that interest in your favor. This can take a lot of pressure off from having to pay the loan back quickly because the penalty of borrowing money is less severe. In the show notes, I have links to a few of my past episodes from Season 1. I believe it's going to be You're Such a Loner, HYSAs, and Inflation Nation. Last one, guys, we got number 10. Embrace your identity as an investor. Understand that HYSAs aren't designed to fully protect against inflation. While they're a low-risk way to grow your money, they often don't outpace high inflation over long periods. Unlike investments such as retirement accounts, index funds, or real estate. That being said, my money identity grew so much when I embraced the fact that an HYSA is a type of investment. I'm capable of understanding investments by taking a small step to gain momentum and using money as a tool via an HYSA. Let me say this one more time. Don't act woke and be broke. You are not only considered someone who quote-unquote invests if you are all up in the stock market. Many people are shooting blind there anyways because they feel like that's what they're supposed to do. Listening to this episode is also an investment in yourself, and HYSAs are technically a financial investment you can take and make right now. Own it, finessers. You got this. That's all, finessers, for our HYSA 101 crash course. To sum up, high-yield savings accounts are a great tool for building your savings and growing your money with minimal risk. Rates do fluctuate with inflation, but inflation going down gives power back to your hard-earned dollars. I will always advocate that HYSAs are a great first step to helping you work smarter, not harder. Let's stop drowning in bills and get on the boat where we win with our money. If you enjoyed this episode, and I hope you did, help me learn with you and be sure to subscribe, rate, and leave a review. Stay tuned for more episodes where we continue to build your dimensional wealth with wellness. I'm JaeVic, and please don't act woke and be broke. Until next time, stay savvy, and if you don't know, now you know. Disclaimer, this podcast is for informational purposes only and does not constitute financial or mental health advice. Always seek professional guidance tailored to your personal needs.